Well, welcome everyone, and thank you for joining us for another incredible Green Team uh, call. We're so excited that you're here to learn about taxes. I know it's not necessarily all exciting and fun, but I got to tell you, we had a lot of fun in Florida at the Fountain Blue doing our business meeting. This was our board meeting many years ago. Amy's there, and along with the Queen, Cheryl. So we were toasting to another good year. So I hope things are going well for you and that this year will be another great year. Now, again, it doesn't have to always be about how much money you make. It might be just about how much money you can save. And so, with that, let's go and talk a little bit more about the tax help. All right. So, first tax tip is real simple. Find a good home-based business accountant. Because one of the big things, if you go to your typical H&R Block or your, Jackson Hewitt person, they may have a different understanding because they're doing mostly stuff for people who are W-2 employees. So they might be all kind of weird and freaked out about some of the deductions that you're looking to make. Another thing you need to do is you are the one in charge of the deductions that you want to make. But a good business tax accountant can give you a lot of helps and tips and ideas. So, first thing is the home-based business equals tax savings. And like I said earlier, for a lot of people, even if they don't make a lot of money right away in their first couple of years building their business, they can save thousands of dollars by taking some of the basic deductions that we're going to be going over. So take some notes. We'll open up for questions and answers at the end. For those that are here live, others, get back with the person who thought enough to invite you to take a look at it. And hopefully we'll get all that good information for you as well. The light at the end of the tunnel for you and millions of others is starting your own home-based business. Because this is the cool part about it. The tax advantages alone make a home-based business the single best financial move you could ever make. And so one of the cool things that we figured out right away was the basics of miles, meals, entertainment, and home office deduction. And there's a whole lot more that we'll talk about. So let's get into it. So document expenses, very, very important. It's easier now than ever, especially with the things that you can scan in receipts, etc. Remember, at the end of the year, your accountant doesn't need an itemized breakdown of every receipt in your, we jokingly say, in your shoebox, because they're not the bookkeeper. That's a bookkeeper activity to make that into a spreadsheet, to put that into a way that they can disseminate that information and put that into your tax return. So the goal is to have it all done electronically. And one of the basic ways to do it, if you don't have a tax type bookkeeping type software, is to just put it on a spreadsheet. So small business deductions are not only legal, but they're also ethical, and we all deserve to be able to keep more of our money that we're making. Also, everything that you spend money on to grow your business is a tax write-off. So just think in those terms. Did I travel somewhere? Did I give a reward? Did I give a promotion? Was I doing marketing by giving out samples? All that kind of stuff can be a business write-off. So you own your business and you need to run it like a business. So what I would suggest is to make it easy, have a credit card, which is CC there, have a credit card for business expenses. So everything related to your business you can put on that credit card because then a lot of the tracking and itemizing and different categories will automatically be tracked for you by using that type of credit card. So because I have multiple businesses, I have multiple business credit cards. I also have other personal credit cards. And so at the end of the year, I still have to take some of the personal stuff, reconcile a few other things, but it just makes it easier if you have one business credit card. And I would recommend get one that gives you some sort of points or privileges or maybe even air miles. All right. So you now qualify to deduct everything that you spend money on that is related to your business. The tax code is designed to give business owners tax breaks that you don't get in a W-2 job. Now, some of you might already be working in a 1099 type, like, straight commission type job. So hopefully you're already used to taking some of these write-offs. But for a lot of people that are W-2, they're used to having big chunks taken out of their checks, taking some of the basic deductions that they can get, as a homeowner or maybe with child care and different things like that, maybe health care, and then hoping to get some money back from Uncle Sam. Your goal really should be to pay in at the end of the year because then that way you've been able to use your money and have access to your money all year, not letting Uncle Sam keep it and then hope and pray to get some back. So keeping receipts and good records are very important. Create a simple filing system. Again, you can scan it in. There's some great apps now where you can just take your receipt. If you don't use that credit card that I was talking about, you can just take a picture of it. It'll automatically kind of know what kind of an expense that is. It'll put it in the different categories for you. So check that out. I don't have any recommendations, but there's some great online apps that you can take a photo of receipts that will help you to keep it electronic and keep yourself organized. And then we talked, of course, about the credit cards will help keep you on track as well. Set up the documents by month, by quarter, by year, however you want to do it. Save every receipt because you never know what is going to or isn't going to be a write-off. It doesn't have to physically be saved. If it's saved electronically, that's still proof if there was ever an issue with an IRS audit or having to go back and amend your return. Even food and items for business parties and meetings are a write-off. So think about it. If you're going to have a get together, like our uh, first of the year launch, you're going to have some hors d'oeuvres, you're going to have some pop, you're going to have some water. Ooh, I just said a swear word, pop. Sparkling protein. Just kidding. Anything that you have that you're buying for that particular event, including the tableware and maybe tablecloths and things like that, all can be a write-off for your business party or business meeting. Um, People who keep receipts and take advantage of tax breaks will, on average, stay in the business much longer than those that don't because they don't necessarily look. Why do we get into Shackley? We get into Shackley, I would hope, number one, because you want to live a longer, healthier life. Number two, you get into Shackley because you want to make some money. And also, one of those things, including things like being able to network and be around like-minded people, right up there with that should be also the tax advantages that you get as well. So let's talk a little bit more about the tax breaks. The average person could write off 3,000 to 6,000 a year. I'm just kidding. There's a little extra off there. So we're going to really write it off. And how do you do it? Well, we're going to talk about some of the basic things, but remember mileage, meals, home office deduction, and more. Even your legal and accounting fees you can write off, depending on who you use or what they charge. If you don't make a lot of money in your current job or business, you need tax breaks. If you make a lot of money in your job or business, you really need tax breaks. Your goal might be to, how should I say it, to pay more in taxes than what most people on average would make in a year. I mean, that would be a good problem to have, right? But the idea is that percentage wise on how you would be able to save money is very significant when it comes to businesses versus W-2 employee. You hear people talking about, oh, if I make X amount, like over 150 or 200,000 or whatever, I'm going to pay 40 or 48% or whatever it is on taxes. I've never figured out why someone who's making that kind of money doesn't also have a side hustle like Shackley to be able to then also take advantage of what could be literally not just 3 to 6,000, but could be literally tens, not 28,000 or more in tax write-offs. So check with your accountant each year on the new tax laws, because even this year it's changed again. The IRS can audit you up to 6 previous years. So you want to save all of your documentation for at least 6 years, again, electronically or paper or both. Receipts fade, and IRS allows taxpayers now and always have for a while. It's just that technology wasn't always available to scan and store them electronically. And I don't know if you've noticed that, but I think there's a little something with those, Home Depot receipts where they purposely fade over time so that you can't use them and try and, I don't know. It just seems kind of weird that way. So definitely scan them because you want it electronically and then you don't have to worry about losing them or them fading. Keep a backup as well. If you do it online, you could do maybe something with a Google Drive, so it's on the cloud. If you have it on your laptop, make sure that you're always backing up just for everything that you would lose, but also, of course, for all your tax documents as well, in case your hard drive was to crash. You can't go to the IRS and go, "Oh, sorry, I don't have anything. My dog ate my laptop or my hard drive crashed." So you got to make sure you got backups. And with today's world of cloud-based stuff with apps and different things, it's really easy to keep everything on the cloud. Also, there is apps, as I said, for both the iPhone and Androids to help you keep track of these expenses and mileages. Check those out, use them. And by the way, if you're charged, like, let me give you an example. Like, I have one that's called Miles IQ. And what it does is it's an app on my phone that runs in the background anytime I'm moving, and it knows because I'm moving, at least over, call it 7 miles an hour, it's automatically tracking my miles. Then at the end of the day, I swipe right for business or swipe left for personal. It does all the work for me. There's no more mileage logs and all this craziness. All you got to do at the beginning of the year, is put in what your mileage odometer is, and it does the rest for you. Now, that app used to cost like $29.95. I think it's now up to $49.95. It's worth every dime. And that $49.95, of course, is a write-off, right? Got it? Good. All right. So we're going to do questions and answers at the end. So take notes if I'm going kind of fast and kind of excited. I don't know if I should be this excited about taxes, but I am. Uh, so don't throw your money away. Obviously, the money you make is important. So claim all deductions that you can, track them, use the credit cards like we said earlier. Use the Miles app, which I just talked about. You're going to be doing a new schedule, a Schedule C. It's going to be a little bit more difficult. Most people could do it on their own if they have an accounting background, but most people will hire professionals. You'll get not only the immediate write-offs, but there's some future tax breaks as well, or some things you can depreciate over time. So you may not get it all in that year, but you'll be able to get more and more each year for so many years. Converting your money spent on mortgage, for instance, utilities and all those other kind of things, including auto stuff for the kids, etc. You can make those into write-offs. So who says so? The IRS and the DSA, which is the Direct Sellers Association. So pay yourself first, invest in yourself, and of course, you are the most important asset that you have. So make sure that you're taking advantage of that and giving yourself every advantage that you can. All right. So I want to just talk a little bit about some of the things, and then we'll go into more detail. Let's talk about the mortgage. The mortgage write-off, when it comes to your business, is related to the home office deduction, the percentage of that room that you use for business. Now, it's kind of interesting because in our home now, it turns out, we have three offices. We have a gym office that Amy's in. I have my own home office, and Cheryl has her home office. So technically, we could take a percentage of each of those three areas that are used for business. Now, back in the day, it'd be like, oh, if you have an ironing board or you do anything else in that office, like crafts, you couldn't write it off because it's got to be exclusively business. They're super lax on that now. Um, as long as the main purpose for that space is business, then we're good. So, Amy, you're going to do more work there than working out, right? Just nod your head and smile. Good. All right. And then also auto, same thing. You may not drive a ton, but anytime you're driving to go meet with someone or you're going to have lunch and talk business, that can be a business write-off. Kids, let's think about that. As young as maybe 7 or 8 years old could be doing some basic things like helping you organize things for flyers that you're going to hand out or get ready. Maybe if they're like 12 or 13, they could be helping you doing some online stuff or social media, maybe even earlier. So think about the age appropriateness of those kids or grandkids and knowing that you could hire them and write that off, which is pretty cool. All right. So I will save some more for later. Let's see what else we got here. Okay, educational expenses and license. Now, the cool part about it is that if you go to conference or you get on a Zoom call or you do any of that stuff, think about what's required. Well, you need to have a laptop so you can write that off if you need a new laptop. Hint, hint. Maybe your phone is kind of slow and you need a new phone and you're doing stuff online with social media. You can write off your phone. We don't necessarily need a license. Some cities, some areas, they might require some sort of a license, depending on if you're doing like a trade show or doing any kind of retail selling of the products. But for the most part, think of the expenses when it comes to education as anything related to going to an event, going to a training, going to whatever, and knowing that you can write that off, or having an event at your home, again, as an educational event could be a write-off. Percentage of your self-employment tax, again, that's also nice. Samples that you give out, remember, those are marketing opportunities that can be a write-off. The business tools, all the types of business tools that could be brochures, could be advertising that you do, through even online advertising or marketing if you're doing any kind of that. I know there's some people who spend a lot of money on Google AdWords and other online marketing. Not that you're doing it, but if you do or should get into that, remember all that can be a write-off. Now, here's the key thing I want to talk about. Gifts to clients are maxed or capped at $25. However, if you reward someone or award them a prize, that doesn't have a cap. So think about it. We don't give gifts, we give rewards and we give prizes. Please remember that because then you're not limited to $25. Here's an example. How many people have received some wonderful stuff from Cheryl that's probably valued at more than $25, whether it's jewelry or things that show up in the mail? Well, guess what? Those are rewards, awards, and prizes. Therefore, all of that can be written off. And I guarantee she does that because I help and work with her on all that tax stuff. Another example might be a client who buys something, and I know Shackley will do stuff for birthdays and other things where you can get discounts. But just get creative about the idea of how you can make it a prize. Like, hey, if you're the number one person who ordered as a customer, I'm going to give you X amount off, and that X amount off is like $60 worth because they placed a $700 order, a $600 order. You could write that particular prize amount off for that to be redeemed on product or whatever. We talked about hiring the kids and grandkids. Again, we talked about age appropriateness as far as what activities are doing on how you can write it off. So just kind of remember that because literally, think about it. They're looking to make money and you're looking to save money on your taxes. So why not hire your kids, pay them 18, 20, even $25 an hour, which might seem like a lot of money, but you need the write-offs anyways. And so therefore that money, even though they don't get to keep the whole $25 an hour, maybe they only get to keep half of that, like 20, like 1250, and the other 1250 of it goes into an interest-bearing, CD or some sort of educational fund. Hello? So you've paid it to them, but it doesn't mean that they get to have access to all of it. So that's just another little inside kind of wealth management or an investment kind of thought. All right. Now let's talk about some other legal deductions. 100% of your business meals when you're away from your home are a business deduction, meaning that if you're going to go for 3 days or more, or even 2 days or more for somewhere to go meet with someone. And by the way, when you go visit relatives, it doesn't mean that you're visiting relatives. You're going on a business meeting to share the products and the business opportunity. And therefore, those meals when you're on the road can be 100% deductible. If you were having meals with someone, in fact, back in the COVID days, they were doing it differently, but now we're back to like the 50%, that you would be able to write off their portion of the meal, but yours does not get written off if you have a local lunch or meal or dinner. Something to think about as well. When we have a few people getting together, like the bill's a big bill, and we then call it a business networking event. So therefore, if I'm paying the tab and it could be $300-400, I'm not going to just take half of that as a write-off. I'm taking all of it because we had a business networking event. Hint, hint, nudge, nudge. Um, Also, things like utilities and home office space, we talked a little bit about. Again, you would break it down to your mortgage, your utilities, any maintenance, all those types of things get clumped in for the home expense. And then let's just say that was $10,000. I'm just using just rough numbers. And you took a percentage of that based on your square footage so that each of those home office could be, maybe it would be $1,700 or it'd be $2,200 that year that you could write off. There's some simpler ways to do it where you can take a basic number or an actual number. Won't get into all the details, but definitely talk to your accountant about the best way. Because people were always shy about getting audited because of home office deduction. Now everyone does it. Be a part of the cool kids and do it because you definitely deserve it. Take all the write-offs that you can. All right, so repairs and maintenance we talked about can be part of that. Office supplies, I don't know about you, but ink is like the most expensive liquid on the planet. Definitely write off your ink, write off your paper, your pens, anything that's related to your business. Furniture, like maybe you need a new chair because it's like you're sitting in your chair a lot. Well, that $180 chair you can write off 100%. Publications and books. Maybe you're buying some books or audiobooks or different programs that you're doing online that you're paying for that educational. Like, for instance, the Tony Robbins event was free, but then there were some upgraded things you could do. Any of those things that you have as educational or personal development related to this type of a business could also be a business write-off. Mileage, we talk about mileage, meals, entertainment, and home office deduction. Well, when we comes to recording your mileage for 2025, it's 70 cents a mile. So think about that. Now, there's also a deduction for if you're doing anything medically. Um, I usually don't even do that, even though we could, as we were going back and forth to the doctors and stuff. But we just do a lot of the business, and it's really weird because it's like I got to like go, all right, fine. I got to throw in a few, personal because otherwise it'll look really weird if it was like 100%. But if you had more than one vehicle and you had one vehicle designated for, business only, and you had a personal vehicle, you could do 100% of that. There's some other things you can do with a heavy vehicle deduction. If you buy it with an LLC, if you form an LLC, and then you buy that vehicle and it's, over 6,000 pounds, you could take all the write-off on that by buying a new car. I mean, there's just some really wonderful things when you get into kind of next level of income. Won't get into all that today, but it is something that's available. Business travel, of course, we talked about that, whether you're driving by car. I mean, Cheryl did the math and she figured just driving down to Florida, where we're obviously expanding our business in Florida, hello, between the mileage, meals on the road, and hotel stays, we're talking like $2,000 write-off to go down to Florida. So, obviously we're going to take full advantage of that. Through the per diems, some of them are like between $59 and $79, but it could be more in certain areas that are super expensive, like New York City might be maybe $89 or $82 or whatever. Um, so just remember when you're traveling, the meals on the road write off, the miles that you're driving write off, anything, even get this hint, hint. If you're on the road, just think about this, and you're going to get together with an event and you've been driving for days and you need to be refreshed and you need a haircut and you might need to get some dry cleaning done and you might need to get your nails done because you're going to be in front of the room speaking or training, or maybe if it's a small room, it doesn't have to be big. Those things on the road that are related to your business can all be 100% write off when you're on the road. Think about that. And when you return, the first time you do dry cleaning, when you come back from a business trip, that can also be written off, but you can't write off your dry cleaning in general. Hope that makes sense. All right. So, a lot of stuff, so little time, but there's a big difference between making money and keeping it. And I hope some of these tips and ideas will give you ideas of how to save that. Cheryl loves to keep these trainings to like 10, 15 minutes. There's no way with all this information and my excitement we could keep it to that short of time, but we will definitely keep it to like 25 minutes. So let's wrap it up. We'll do some questions and answers. And remember, it's your money. Document everything, write it off. There's a big difference between making money and keeping it. All right. So the stream of money come to you. You deserve all the success and prosperity in the years ahead. I believe in each and every one of you. Believe in yourself. And here's to more prosperity, great health, and a great year in 2026. All right, guys. Last thing. Jobs use people every day. Own a ladder, don't climb it. Think about that. And Build Your Dream or You'll Be Building Someone Else's by Richard Bliss Brooks. And that's really true if you think about it. If you're working for someone else, they have a dream and you're part of that particular machine. I always tell people you want to own what it is. You don't necessarily want to have to do all the work. So the cool part about it is that you get to work for yourself, but not by yourself. You get to have all the write-offs. You get to be able to do something that's rewarding, where it's not just another job, it's truly a business. And I hope that it inspires you, knowing that you're making a difference not only for yourself, but for your family, for your children, for your friends, and also the planet when it comes to being a green company like Shackley. All right. Love each and every one of you. We'll see you again on another training. Marty with the green team, paid to be green, saying bye for now. We love each and every one of you. See you soon. All right, we'll open up for questions and answers.